If you want to know about the market cap, join us at the end of the video. Currency traders or precious metal traders. Cryptocurrencies are a new and flourishing asset class and should be dealt with realistically. The totality of market cap is misleading. For several reasons, making financial decisions based on the total market cap of cryptocurrencies can be misleading. The first problem is that to evaluate each project correctly, its market value is calculated based on the amount of assets in circulation and the value of each unit, but it is difficult to verify this information, and if this data is incorrect, other calculations are automatically invalid. Will be. The second issue is that some projects manipulate the market cap to create a sense of security and false value. Merely paying attention to market value in this situation without considering other aspects can lead to potentially harmful financial decisions. Estimated market value. There are several methods for calculating the market cap. One way to get the future value of a network is called estimated market value. The term estimated market value comes from the stock market. In the stock market, if all the stock options are used and all the securities are converted into stocks, this figure is called the estimated market cap. It is also important to consider the current and future supply of an encrypted asset. Not all coins related to all digital currency projects are currently available. In Bitcoin, for example, we know that eventually there will be 21 million units, but so far about 18.5 million have been mined. In calculating the estimated market value, the maximum amount of bitcoins is considered. As a result, to calculate it, we multiply 21 million by the price per unit. Tokens and currencies with negative inflation. Many cryptocurrencies will see an increase in the number of coins in circulation over the years. In other words, there will be no max supply for them. In these cases, even if the price of that currency remains constant, the estimated market value of that digital currency will be higher in the future than it is today. However, there are cryptocurrencies that are trying to actively reduce the amount of coins in circulation. This reduction can be done in a number of ways. One of which is a process known as burning coin. This will reduce the maximum supply of the asset in the future. If the price of an asset does not increase over time and its trading volume is steadily declining, the estimated market cap in the future could be lower than it is today. For example, there is currently a currency with a maximum turnover of 20 million units and a price of $1 each. The project team decides to buy tokens from the market and burn them, reducing the maximum number of tokens in circulation to 18 million units. Assuming that the price remained at $1 after the announcement of the burning of the coins, the estimated market cap of the coins dropped from $20 million to $18 million. The market value of cryptocurrencies is one of the basic criteria for economic measurement. This measurement provides an assessment of the total value of the cryptocurrency industry. It can also be helpful to distinguish between what is currently being reported and the estimated market value. At the same time, it is important to consider other criteria. Market cap is just one piece of the puzzle. There are other aspects of the industry that should be explored before taking any financial action.